Let's take a look at the inflation numbers that have come out for June. Cost of living decreasing in Nigeria. We saw consumer inflation figures from the National Bureau of Statistics showing that price increases slowed to 10.2% year on year in June. That's from 12.4% the previous month. That is much lower than the market was forecasting as food price inflation comes down. Does this take the pressure off the CBN to hike rates further, or is there still more room to hike rates?
Well, as you know, Samantha, the whole decision to hike rates was not solely an inflation-driven decision. The structure of the Nigerian economy means that monetary policy as a tool to manage inflation is not as robust or effective as it might be in other markets. So one of the more primary drivers for the rate moves has also been liquidity in the system and the impact that is having on demand for US dollars. So, of course, it's a welcome development that inflation has come down to 10.2%, and food inflation falling was a significant sort of driver of that. And at present, our Standard Bank estimates are for perhaps single-digit inflation by the end of the year. So all of that is a positive development. But as far as the pressure to hike rates is concerned, we expect that decision to be driven by a broader range of factors than just inflation.
Let's look at the earnings results we've seen starting to trickle through. Strong earnings for Zenith, gross earnings rising by 26.8% to 122.8 billion naira, profit after tax up 44% to 30.7 billion naira. Where's growth in those earnings predominantly coming from?
Well, to be honest with you, we haven't had much detail from the company. All we've seen thus far is the numbers that come through the exchange. So we haven't, they haven't revealed the sort of breakdown on the driver of those earnings. But I think that the key point really is that, Zenith Bank has been, very cautious in the past, and they have been sitting on very strong capital adequacy, and the capacity to grow loans was always there. So, a slight uptick in risk appetite, a slightly more aggressive stance by Zenith was always going to give room for a significant uptick in earnings, which is what we're seeing. So the run rate of these numbers is ahead of our forecasts, and we look to see further detail from management as to whether this is going to be sustainable for the rest of 2011. But certainly we see the loan growth figures as pretty robust versus our expectations. We're expecting 12% loan growth for the year, and their run rate is ahead of that. And the earnings growth also similarly is ahead of our expectations. Their ROE run rate, we are expecting around 14% for the year, and they're nearer 16% rather, based on these efforts.
Let's move on to Skybank's quarterly earnings results. Year on year, modest growth there, 3% up from the previous period, but quarter on quarter profitability more pronounced. The bank almost doubled its figures on the key income lines. Looking at gross earnings rising almost 100%, profit after tax spiking to 3.4 billion naira. What are your thoughts on Skybank's half-year performance?
Well, Skybank's performance is below our full-year forecast run rate. We really are looking to see more momentum in Q3 in order for them to deliver the ROEs of sort of 16% that we're expecting for this year. In fairness, management had guided that half one would probably be slower than the second half. The increase in net interest income really was driven by a fall in interest expense rather than an increase in interest income in and of itself. So we're looking to hear from management as to where the loan growth is coming from. We want to see how far they've gone in terms of booking loans related to the oil sector and Shell divestments, because that's something they've cited as a key driver for growth this year, and really look to see where the momentum is going to come from in Q3. But for the moment, it still remains one of our top picks. Obviously, given the sell-off in the market, the valuations look attractive, although we would also point out that at this stage, the market isn't being driven by valuations as such. It's far more driven by sentiment. If we look at where these names are trading, they're significantly below where they might typically have been. Skybank's 2011 price to book is around 0.8 times. Our overall universe is 0.9 times. We have UBA trading like a tier 2 bank. GT has come off at 1.8 times 2011 book. So the valuations are attractive, but sentiment is not as firm as it needs to be for us to see performance. So we look to the results that come through for the rest of the first half, and just a broader improvement on kind of macro indicators and policy direction to really give investors a reason to believe it strongly in the Nigerian market in the immediate.